Hello everyone, it's me, the Boss Hog. We're back in my bedroom today with the angelic light there behind me. And today we're going to look at my stock portfolio as at the end of November, how it performed during November. It might not surprise you, it was a pretty challenging month. I'm sure it was for many people as well. It was particularly brutal for me. So let's have a look at it. Let's laugh at my mistakes or join in some sympathy. How did I manage it? How did I respond? Moves I made, etc., etc. Let's do it. Alright, so there's no two ways about it. If you look at the yellow there in the middle right, that is my performance during the month. Yeah, minus 4.6k in terms of my capital growth, so a loss to be clear. And dividend there 223 was solid, but you know, a bit of a decline even on a rolling quarterly for reasons that we'll get to a bit later. It was particularly painful, I think, if maybe that's a bit of an exaggeration, but you know, it sucked because in the middle of the month, you know, I was up like 3k. I was catching up on the S&P in terms of my index comparison, and things seem to be going really well. You know, my portfolio is fairly exposed to recovery, value, etc. I'm very light on tech, and I got absolutely mullered for a few weeks, you know, toward the end of the month, basically. What that means at the moment is that my unrealized positions are almost all red. You can see there in the kind of middle table, it's pretty red and by a fair amount. Now, because I'm a fairly active trader, I have locked up realized profits beforehand. So overall, I'm still pretty seriously up in terms of profit there. So, but now it's only 9k, whereas during the month, you know, I'd been up just past 16,000. So it just felt like it really ate into my profit that I've made, which is unfortunate. I did spend, especially when the you know, the COVID variant news first hit, I did spend hours literally of time reviewing my larger holdings, making sure I was still happy with them. Has anything materially changed? And basically got to the decision that no, it hasn't. You know, I basically am bag holding at the moment, if that's quite the right word. But then I really believe in my larger holdings. So that sort of helped me manage it. And you know, for anyone who's seen my weekly trading videos, you know, I've actually done fairly little selling, especially over the last week, once I sort of made those changes during the month. So now we just have to sit on it. The fact I'm kind of playing with house money sort of softens the blow at the moment. You know, I'm not really eating into my capital as I see it. This 8,000 is still way more than I would have earned in the bank anyway. So fine. That's how I'm choosing to look at it. But it was uncomfortable. Oh, and also as well, like psychologically, you know, I got above the six figures, and then you can see here for the month end, you know, it's back down to 99, and that was after I added, you know, 5 grand in capital as well. So it was unfortunate just to kind of go back below that threshold. So yeah, overall it's my first well, it's my second loss, sorry, monthly loss, but it's my largest by some way. You know, my other one was in July. I actually was profitable in September, which I know will be different to many people because of my holdings. This time, however, I think I suffered more than most people, certainly compared to the indexes, which both did go down, but mine went down once more. And also as well, I kind of treat December as my start date. You'll see there the table at the top, you know, it starts November 20th, that's when I started, but I really started small with just a few holdings, and I started on about the 20th of November, so actually it's just easier for me in terms of the cutoff to say that I started on December, right? Just easier. So this was in essence my 12th month, and what a dreadful way to finish the first year. So that also kind of sucked as well, you know, because I kind of wanted to be here and be like, yeah, I managed to, you know, outperform the S&P 500 in my first year, but you're about to see that we didn't. So let's have a little look at that. Alright, so yeah, this is I'll start with the top right here, my time-weighted performance. This is important because I'm contributing capital so quickly compared to what I already have there, so time-weighted gives me a much more reasonable comparison and performance. And you'll see there in September, I actually overtook the S&P. You know, I've been trading it modestly for most of the year, but then September I got ahead. October I fell a little bit behind, but no worries there. And then November I kind of ended up really far behind. So I'm still ahead of the FTSE 350 comparison, so that does feel pretty good. But you know, considering where I was again just a few weeks ago, that sort of sucks. And likewise as well in terms of the profit on the left. You know, you can see there it went from basically all-time highs, you know, that's above 16,000, and then just halved basically. You know, my UK holdings went negative in terms of the profit that I've made from my UK stocks, so you can see that in the graph there. They have since recovered a little bit, but it's still really volatile out there, right? So now I think I basically just have to sit on my conviction plays, and hopefully it'll go up. I mean, I have had some falls beforehand, but nothing like to this kind of degree, and you can see it there, right? That tracks everything since I started, so that was unfortunate. In terms of the moves I made during this month, the big one actually, they're Genius Sports. So I sort of was building a stake before they released their results, and I was really happy that I didn't go a bit ham and kind of buy quite heavily, which is a mistake I made with a holding in the past. And when they published their results, the market really disliked them. Like, they went down like 35%. I decided to make a big move. I sold out of my previously most successful holding, which was Huntsman Corporation, made about a £4 profit on those, and basically chucked it all into Genie. So my average with Genie at the moment is about 1040, so I'm definitely sitting on a fair red chunk here, but I just feel like the reaction was a bit overdone. I like the direction it's going in, actually. You know, the earnings call was solid. Yeah, okay, it's you know, they basically reduced their EBITDA, but here were the reasons for it, and I thought those reasons were valid and made sense. And again, it seems like a fairly organized and focused strategy that we're seeing there. So I decided, like, this is definitely a speculative hold, but it's a company that I feel quite comfortable with. And, you know, it's basically content, betting, and big data, which again for me is sort of like really interesting. I like gambling, I like big data, so again, it's kind of one of those companies I think is well positioned for growth in the future, and hopefully here I've got a really great entry point, even if I have to sit on a red for some while. I don't mind. Disney, I think, speaks for itself, right? It got punished likewise with COVID because of the ships and parks. But I still like Disney. I think once everything gets up and running, it's going to be a great thing. And it's one of those stocks I can sleep well at night holding. Games Workshop, very similar. Gamma here, actually very similar. Like, Gamma isn't a cheap stock, even after it's really oversold from the earnings update. So for me, you know, to be able to build what's now about an 11% of my portfolio stake in Gamma Communications feels really good. Again, I work in the industry, so I have no problem here kind of understanding the company or what it's worth, in my opinion. So hence why I put my money on it. Hollywood Bowl here, I'm picking up under 230. This is like a conviction play I've had for a long time. Bristol Myers, I think, is undervalued. I think it fell originally because, you know, it's expected to bounce back when cancer treatments, etc., start up again. Its pipelines continues to look really good. It's had a lot of positive updates in terms of new drugs coming through as well. You know, and every time it seemed to publish, it fell. It has been a little bit better this last week. It's finally found its footing, and you know, for me now, I've got an average buy price on BMY of like 59. I'm really delighted with that buy price. I think it's lots of upside at that kind of level. It's got solid yield to support that as well, and this for me is probably looking like at least a fair number of years holding. I've got 350 shares in BMY, so again, my second largest holding actually. And Evraz, which was the first company I ever bought, made some good money on Evraz over the year, and now we're back in. I decided to buy this at 568, I think it was. For me, I was waiting for a price under 575 if the iron ore price was above 100. Those two things happened just about, and so I decided that I wanted to get back into Evraz from that perspective. So it's a really big yielder, assuming it can keep that yield, and it will be under some pressure because of that iron ore price. But for me, I think iron ore is a good play in the long term. So that's where we are. And yeah, what more can I say? Let's move on to the next. All right, so I don't want to spend too much time here. A couple of comments that I made last month that I feel like I should address. So first of all, I said I wanted to increase my technology slice, which I certainly have. However, it's not exactly how I imagined it and what I really meant by that comment. You know, technology slice, I was thinking kind of Microsoft, Apple, right? Those sort of Amazon, etc. Instead, it's basically Genie. So, you know, again, having like 10% of my portfolio is more or less in Genie here. There is also a couple of others, right? But very small holdings in those others. And again, that isn't really my intention here. It's just that's where Genie sits, so I put it in there. So yeah, that is what it is. Also, I mean, like, I've now only got 20 holdings, which to me is probably too few. I'm actually thinking I need to add some more. Now, again, to address what I said last month, it was like, oh, I probably need some house builders. Well, during the month, I actually went out and bought very small stakes to start building into 2 house builders. But then I sold them for, like, you know, very small profit. Well, that was like 5% in a week, so that was okay, but I didn't have very big holdings. And again, I just sold them, so I was just trying to scrounge around for money I could get from anywhere, right? And And yeah, that was kind of it. You'll see here as well from my slices, right? It's like transportation, that's my big play on National Express. Consumer discretionary, I'm pretty exposed to consumer discretionary, and those two slices got absolutely murdered over the last few weeks. So again, here, whereas when I was in September, I was a big like, way I've really benefited from having a tech light portfolio. Here I got really punished actually. My financials, by the way, are almost exclusively insurance companies, so I've tried to keep them as sort of the stabilization. So that's been helping a little bit, but a difficult period. Again, I did all my due diligence. I sort of reread up on any holding that I had that was over 5% of my portfolio. I was still happy to own them, and so we just have to stick with it now, effectively. All right, and next up is dividends. All right, so I always change my mind about how much I love dividends. And by the way, I do still like dividends, but over the last quarter, I would say I've kind of been reducing my dividend yield, which had been at like over 4%, and it has definitely come back now. In terms of the dividend this month, it was a relatively modest, but still £223 basically. So that felt pretty good. You can see there as well, it's only got 4 dividends during the month, 2 big, which is for Bristol Myers and EPD. You can see there, especially with BMY, like I got dividends for 160 shares, but I have more than double that stake today. So the next time we have a dividend from BMY, I should be looking like £100 in dividend. And likewise as well, at one stage I had as many as, I think it was 540 in EPD. I sold down, I think, to buy National Express when it was at like 217, which was just ridiculous in my opinion. And then I added some when some money became available, and it dropped to like 21. Which to me, EPD is a buy anytime it's producing an 8% yield, right? My long-term target is to make 8% from investing. If I can buy a company that doesn't even need to see capital growth to get it, then I'm actually quite happy to have that as kind of a relatively defensive part of my portfolio. By the way, the dividend for EPD is super well covered. It's reducing its debt, it's reducing its capex spend, and all of its capex is being funded from operational profit. So again, it's increasingly resilient and capable of throwing off cash, which is ultimately the reason for me owning this business. So but I would say the actual dividend I got paid here was less, a fewer number of shares than it would have been 3 months ago, so that also contributed to that reduction even on that. I would say in general, I've been like polarizing my holdings increasingly more actually. Now like I have a handful of shares that are going to drive the majority of my dividends. They are focused in pipelines, just EPD at the moment, financials, and that's my insurance companies, and health, which is primarily BMY. And yeah, what this meant actually is my blended portfolio yield reduced to 3.51%. That's the lowest it's been for months. This is what's really driven a very sharp fall here is the fact that I sold out of Huntsman Corporation, which was yielding over 3% and was a significant holding for me. Even at one stage it was my largest holding. I had like 700 shares. But I'd been selling off just because it got to where I thought was near enough to fair value. And I put all of that almost into Genius, right, and a handful of other things that either don't yield at all or don't yield very much. So that's really the main contribution for that. And again, I'm perfectly okay with that, right? By the way, I would consider getting back into Huntsman if it drops under 30. I think there's enough safety margin there, and I've already done a ton of research on it, so I'd feel very comfortable if that opportunity arises again. But for now, I'm no longer in Huntsman, and I'm completely sold out. So, and I guess that is a good time to have a look at my individual holdings as they stand at the end of November. So let's have a look at those now. All right, so first of all, these are my active positions. Who they are, they're worth rebased, and by rebased I mean back into pounds for anything that's dollar holding. Worth as a percentage, so percentage of portfolio value, and then profit and loss as it stands. So just a reminder on method for anyone who isn't aware or can't remember. The P&L here shows realized and unrealized. So like for companies like Genius or Games Workshop that I've kind of sold out in the past, or basically traded, I'll include my previous profit as well as my current profit or loss as well, so that can have an impact. But just the method I use, I think it's fair and consistent. Having spent the last few months just basically getting increasingly black in this case, there's a ton of red here, as you can see. And again, this kind of extends onto the fact that because I'm quite an active trader, I haven't been sitting on kind of 50% markups. Maybe that's my own fault. And certainly in some cases I sold too early. I made like 20-25% profit and then did a runner. So it meant my realized profit looks really good, but where I've sort of sold out of Microsoft, made 800 quid in the past, if I've then put it into, I don't know, Gamma, then it's gonna it's just going to be red, and there's no green for Microsoft in this month either. So again, like when I look at this, it feels quite bad, but I think like once I reflect, it doesn't feel too bad. It's like, okay, yeah, it sucks because of everything I've just been saying. But all of these things, like, I mean, I've got to the point now where, because I only have 20 holdings, like, these are real conviction plays for me. Like, even things like WH Smith, which really suffered, and probably rightly so, from the the latest COVID thing. I think I've got a really great buy price on WH Smith. I think it's a very well-run business, and I don't think it has any super existential problems. It is still loss-making, but 3 out of its 4 divisions are profitable now. And the one that's not, which is its international travel, unfortunately is the one that does most of the earning. But again, I think in the long term, it's going to be fine. I do have a couple of more speculative positions here, or things like I've opened on weakness. So Restaurant Group, obviously that's going to be impacted. S4 Capital had a fall because of changes to its earnings guidance, not dissimilar actually to Genius, although I'm not pretending that they're otherwise related. Just I actually tend to like buying after earnings reactions. Seems to be something that I haven't really thought about that before, but it definitely seems to be the case. But yeah, almost all of these, maybe with the exception of Genius, S4, probably Dark Trace, and Restaurant Group, for me are like really strong, long-term, happy to hold. So that's where we're going. Or if it's not long-term, say National Express, my plan here is to start selling down my stake once it gets to about 270, which would be about 20% up on where I last looked at it, and basically just wind it back a little bit as a percentage of my portfolio, because I shouldn't really have 22% of my portfolio in a single stock. That makes me a bit nervous, especially when it's essentially a value/recovery play, right? I mean, I really have strong conviction in it. That's why I've got 22%, but that's a lot of risk to put in, one fairly small basket of National Express. And again, this is going to be quite volatile until things settle down and stuff is known about their acquisition and everything else. So I guess, yeah. In terms of, so I mentioned about my method, in terms of what's actually green in terms of my active holdings, it's actually at the moment just Everaz and Legal & General. That's mainly because Everaz is a new position and I timed it quite well getting back into it, and Legal & General, I mean, I've had this for some time. I have a solid buy price. I think Legal & General isn't hugely undervalued, and I'm only up about 5% on it, but it's a very high quality, very well diversified professional insurance type company. So they're my only 2 holdings out of this group that are literally unrealized green. So it looks even worse if you look at my Trading 212 account. And partly timing here. I mean, I have seen some recovery over the last week, and I'm recording this on the 4th of December. So, the week was profitable for me, although only just. So this looks slightly less gross now. National Insurance and BNY both had some recovery this week, so that they're a lot less red, which has definitely helped. But I've mentioned here I'm like fairly relaxed about the current situation. Like it doesn't feel good. It helps that I'm playing with house money at the moment, right? I'm basically just eating into profit, so that kind of helps as well. But like when the whole point of my first year is, okay, am I any good? And then ideally I wanted to beat the indexes. I beat the FTSE, but not the S&P. So I think that's a respectable performance, but not kind of the really great performance that I was hoping for. So it's like, it's okay, but it's tinged with disappointment. And I kind of just have to remind myself that, like the problem that you have, especially for me, like I do day end close, weekend close, and month end close, right? It's very easy to look at things in a short term basis and think, oh my God, like panic. And like that is a very natural reaction, or at least for me. And then and then I go away, I look at the data over the long term, and you say, right, okay, I've made some good decisions in the past, right? I should trust myself in this situation. I've put thousands of pounds in things I believe in. Now we just have to wait and see it play out. So that's kind of it. That's like my thought process of managing this. So when I say I'm fairly relaxed, that's kind of why I'm fairly relaxed. But it's only when I kind of step away, sleep on it, do some reading, make sure nothing has fundamentally changed. And I think also, like, you have to be honest, like as an investor. Like I remember when I bought back into Wetherspoons for the second time, and I was like, oh, other pub chains are doing really great, Wetherspoons is going to be the same here, there's a real value. Then they published their results, and I mean, they were just terrible, and I just ran away as quickly as I could, right? And somehow I still managed to make 30 quid on that small trade, and I was delighted. And since then it went down a further like 20%, and rightly so. So sometimes, like as an investor, you have to accept that you just made a mistake, you made the wrong assumptions. Like I was lucky to not get punished for that mistake, but then I maybe rescued it by realizing and selling quickly once, and that was because Wetherspoons weren't like the other pub companies. Like when you actually did a bit more research into it, I was like, oh yeah, okay, there's differences here that maybe I hadn't realized. and that's okay. Like, you make a mistake, you fix it as soon as possible, right? You don't want to make one mistake lead into another one. So that's what I spent a significant amount of time during the month doing, basically making sure, have I made a mistake with National Express? I don't think so. Have I made a mistake with BNY? I don't think so. And I just went down this list and was like, and that's where I got to. So yeah, I guess in summary, a pretty horrible end to the month that had shown so much promise, and not the best way to end the year. Saying that, we still made $9 this year. In terms of a time-weighted performance, we're still up about 18%. So, I mean, way better than I would have got in any other investment scenario. I guess I guess that's not quite true, because I would have done better if I'd have put everything in the S&P 500. But again, I'm basically giving myself a few years to see if I can outperform indexes. If I can't, then I'll just shut up shop, accept I can't, and move on with my life, right? But until then, I'm going to try and be active and try and beat it, and hope that my holdings here vindicate themselves in due course. And again, I remind myself that with Huntsman Corporation, at one stage I was down almost $2,000 on that as well. So obviously maybe that just means I should be buying better, but it also means that I have like a quiet amount of confidence that these will come good. So we'll see. Anyway, lots of side rambles and conversations there. Hopefully you got some value from it. If you did, like, comment, subscribe, and all that other good stuff. Otherwise, thank you very much for watching. I've been the Boss Hog, and good luck with your investing. Bye for now.